This is the St. Johns County Real Estate Auction Report brought to you by Vanta Quality Assets. You can find us at vantallc.com. Investors welcome. Now, let's go to court. And at the auction, we have four properties. The first one sold. Let me show it to you. Okay, first property sold. Let's do it here. Show it to you. First property is 2908 Castnet Court. It's actually found here, as you can see right there where my mouse is. Okay, the stats are here. Now this estimate's 302. High bid was 195. Got it at 65%. Below Zestimate, but that's what they say, 302. Be careful of Zillow. All these other homes around here are Zillowed out at in the low 200s. So did he get a deal? I don't know. So let's go down to the next one. And the next one did not sell, went back to the bank. Very nice looking property. Beautiful home. 316 496. 316 is his estimate. Did not sell, and that is the address. The other property that did not sell is this particular one, which is Hennessy Avenue, 10635 Hennessy Avenue. Okay, basically just a bunch of trees and shrubs and so forth. But the next one's a little bit more exciting. It actually did sell, but it sold at 80% based on what Zillow says it's worth. Now let's look at it. The property is right here. This is 167, 168. These Zestimates, now this estimate's 166, but anyway, we had this estimate at 170. Still, I think this person overpaid for this particular property. Brantley Harbor Drive. But hey, we didn't bid on it. That's the main thing. So that's all she wrote when it comes to the auction. And in other news, what we're going to look at is at the HGX, which is again the Philadelphia Housing Index. I like this index because it kind of gives you a good idea of what's going on in the housing market. Here's a 6-month chart. Let's go to the 3-year. I like the 3-year. It gives me a good perspective. Again, as you can see, this channel is still being built. It's like a downward flag. Okay, that's where we are right now, towards the end here, and it's moving up. The way I look at this is if this breaches, it goes to maybe 210, then we're looking much higher, technically speaking. Of course, other things could happen, so let's go and find out what's going on. Now remember this, I just want to keep it at the 6-month. Remember this chart. Okay, this is again the housing index. Okay, 6-month chart. Let's look at 6-month chart of Toll Brothers. Well, that's looks a little different, doesn't it? That's a 3-year chart. Let's get the 5-year chart. Let's get the 6-month chart out. You know, Toll Brothers looked like it was going sideways, and now, hey, what's going on here? Let's look at September. It started going down, and here, September started going down, then it turned mid-October. That would be the Philadelphia Housing Index. Toll Brothers, though, did not really turn as much. In other words, the housing index is much higher than Toll Brothers. Let's look at Hovnanian's. And here's a 5-year, and here's a 6-month. Okay, Hovnanian's another builder. Yes, they did turn around the same time, but they're going down while the housing index goes up. Very interesting. Very interesting. This is called a divergence, and usually the stocks, if they lead the index. So basically, after a while, this housing index should be going down. So if it hits 210, it may pull the stocks up. We don't know. We just don't know at this point. And I'm talking on a technical basis. Again, we're way beyond technicals here. with this economy. So unemployment claims, it's all about unemployment claims. And actually the civilian labor force since 1967 increasing all the way up to right about here, which was 2007. And the gray marks are the recessions, okay, as you can see here. So 2007's recession, as you can see, every recession with the exception of this one here in the early 80s, and the ones prior to that, labor was always going up. Now labor's kind of going sideways quite a bit. And the type of jobs, are they paying more? No, there's something called wage deflation. Got to be careful of that, because those are the people that pay rents, those are the people that pay mortgages, those are the people that get home loans. That's what we're interested in. And the big unwind. After messing up the housing market, the smart money bails out. Wolfe Street, very good read, dated November 6th, you know. And yes, it's an excellent read, and this is where I got that information from. Also, the big unwind here, look at this. Sales to institutional investors, it looks like the peak was right about first quarter of 2013. From there, the institutional investors started petering out, and so here we are. Now here are the top markets for institutional investors, and guess what? Jacksonville's right in the middle at 10.9%, with Memphis, Tennessee at the very top at 16.4%, and Oklahoma City, Oklahoma 7.4%. So it's a good read. Again, you can find that at Wolfe Street. Excellent site as well, wolfestreet.com. And that's all she wrote. Now, remember, it's court. So take your hats off and good bidding, and never fear.